Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I'm joined today by T3 Trading Group trader Patrick Hawe. Patrick is also a moderator in T3 Live's Pro Desk virtual trading floor. And Pat, this is either your third, fourth time here with me, so I'm looking forward to our conversation today. As everyone knows, it was Fed Day, so a big day on Wall Street, and also coming in the middle of another big earnings week as well. So thanks for joining us today, Patrick.
For sure, yeah. I think it's the third streamcast we're doing.
Yeah.
So yeah, happy to be back. Lots to talk about, definitely.
Yeah, definitely lots to talk about. All right, so our first question for those who have been here before, you'll recognize this. And if you're new, I start off every one of these events asking our traders how they grade their week of trading so far. So Patrick, what's your grade this week?
Yeah, I gave myself a C plus this week, which is average. I'm only going to give myself a good grade if I made good money, although that's not necessarily all there is to trading. And then I'm only going to give myself a bad grade if I not necessarily lost a bunch of money, but made real mistakes that I knew I was making. So this week was average. I think this month has been average. Chopped around a bit, made some, lost some, stayed mentally fine. So yeah, average, nothing really good or bad to say.
Okay. And just a reminder for everyone that this is a two-part event, kind of. I will have a conversation here with Patrick at the beginning, and then the second half of the event is all about your questions. So the live chat is open for everyone to submit your questions for Patrick. I've just put a comment in there so everyone can see where that chat is located to the right of your screen. So please submit those questions, and I will make sure we get to every single one of them by the end of this event. Want to make sure we're talking about, the current news, but also what you might want to learn from Patrick as a professional trader. So submit those as they come up. All right, Pat. So the big story today is, of course, the Fed decision. Bank hiking rates as expected by 25 basis points. So we're now in a range of 5 to 5.25. That's the highest Fed funds target rate that we've had since August of 2007. So talk me through your strategy heading into today's session with this looming overhead until 2 p.m. today.
Yeah, sure. So my strategy for today is basically the same as it always is for any event coming up, which is to figure out first what the market's pricing in, aka what the options market is pricing in for that day. Um, Mostly because again, just algos are so fast these days, it's almost impossible to say, all right, like they're going to come out with the decision at 2, and at 2.00 spot 01 milliseconds, I'm going to react off that. If it's a big enough reaction, you blink and SPY's 2 points higher, 2 points lower. So it's figuring out what we're pricing in and then trying to decide if you want to counter that basically. So for today, SPY was pricing, I think it was 4 points. So I knew roughly, so it's not necessarily where we're opening, but where we're going into it for the Fed. So we were going in at like 412, pricing in about 4 points. Therefore, we shouldn't close higher than 416 or 408. By the end of the day, we actually moved down to 408. So we got that full move to the downside. But yeah, just figuring out about what range we should stay in, and then going counter possibly depending on how big that move is. Because there's just no way you're reacting, when the headline hits and all the algos are reacting. It's almost impossible. I've kind of given up on it, right?
Yeah.
Same thing with like inflation in the morning, like CPI at 8:30. I'm not reacting exactly with that headline. It's more seeing what happens and then, gauging the price action after.
Yeah. The Fed decision is a little bit different than other economic data releases. Like you mentioned, the CPI comes out in the morning ahead of the market open. So you're getting that reaction at the open and in that, first hour of trade. I mean, you kind of settle into a range usually for kind of the rest of the session. So how does your morning trading differ on a day like today when you're getting midday news from the Fed?
Yeah, mostly just making sure I'm not that I'm ready for 2 p.m., which means not over trading in the morning, not going for, some big, like there's no reason really to go for some big market move this morning when the big market event that could move the market is going to be this afternoon. Usually it's during the press conference. It's not during the rate decision at 2, although you usually get
Right.
a jump off that. So, just not going too crazy. There's still things to do. It's earnings season, right? Super busy week. So there's earnings names to focus on, stuff like that. But yeah, mostly just kind of taking it easy. Because again, there's no like why go all in this morning when you know this is happening this afternoon and this is probably what's going to be the catalyst to move the market. There's just no reason to put that type of risk on early.
Yeah, definitely. So the the FOMC statement after the Fed, decision came out, 25 basis points as expected. The big thing that everyone saw in the statement was they removed the language that said the committee anticipates that some additional policy firming may be appropriate, and that gave us a little jump in the market. The reaction was, okay, cool, they're ready to pause. And then the Fed chair, excuse my dog if you can hear her, sorry everyone. The Fed chair during his press conference killed the party, kind of his typical pattern these days, saying a quote that a decision on a pause has not been made today and they will still remain data dependent in future meetings. He was arguably pretty hawkish today, more hawkish than I think most people expected him to be. Do you realistically, though, see any possibility of the Fed hiking rates again this year?
So I've been in the camp these past, I guess like today in the last hike where people are almost making it seem like this 0.25 is going to make or break everything. And I
Yeah.
don't think that's necessarily really the case. It's a big lag effect, right? So
Mm-hmm.
whether they do hike again or not, I don't think it's going to make a huge difference per se right now. So right now the market's saying they're not hiking again. I think it's like
Mm-hmm.
12% that they're going to hike. So I'll go with that. I think I agree that he was hawkish today, and I think he was hawkish in a way of addressing the rate cuts. I actually made sure to copy and paste exactly what he said here. He said
Mm-hmm.
when someone asked him how would not be appropriate to cut rates given our view that inflation will take some time to come down.
Mm-hmm.
And you'll probably ask about this later, but that's what I think really the market's still paying attention to as the market tries to get ahead of itself, as market participants know more than ever these days how important the Fed is. Like it wasn't, it's been a 15-year process of now everyone knows how important the Fed is. So now everyone's trying to get ahead of themselves with these cuts that are coming.
Mm-hmm.
Um, and he, again, specifically said, we're not cutting. It doesn't look like the only way they're going to cut is if inflation dies down, which he said
Yeah.
they're not going to think that's going to happen. And the only reason that is going to happen probably is if we actually do go into like a more real recession.
Mm-hmm.
Um, so it's super interesting. And once again, the market is saying something different than what the Fed is doing. And the market is trading like we're going to get those cuts. The market keeps holding up. Things are fine. So it's really interesting. The future, I think, is pretty uncertain right now, good
Totally.
or bad. It's not necessarily a bad thing, but yeah.
Mm-hmm. Yeah, hard to predict. Today's rate hike, of course, comes on the heels of another regional bank failure this week. Powell did address these issues during his presser after the failure of First Republic Bank on Monday, saying, quote, conditions in the banking sector have broadly improved since early March. So do you agree with his assessment that things are good? Or do you see more contagion across the regional banks? I know we have some news kind of breaking in the last hour about Pac West, so you can probably
Yeah,
mention
so
that
looks
here.
like Pac West is exploring strategic options. Bloomberg's reporting that. I think it's down like 50% after hours or something like that.
Mm-hmm.
So as a trader, we like to follow price action.
Mm-hmm.
What does that actually mean? It's hard to put just a one sentence definition on that, but following relative strength and relative weakness to break that down a little more, how one thing, it could be a stock compared to a sector, it could be a sector compared to the market, but some gauge of how something is trading compared to something else.
Mm-hmm.
So is JP Morgan going under? Probably not. But are there going to be more regionals that go under? They're trading like it's definitely a possibility. So before this Pac W news hit, I was going to say two that I'm not worried about, but just if you follow the price action, they're not trading well, is Pac W, which now here we go. And then USB
Mm-hmm.
is actually another one.
Hmm.
And I say that just you look at KRE, the regional bank index, and you look at where I've been looking at where these names are trading now compared to their initial like fee reaction back in March.
Mm-hmm.
KRE is about back down to that low. It probably shouldn't be. So that's not a great sign. You look at some like a WAL is way off that low still, and I've heard a lot of arguments that they should be okay. You look at a pack W where before this it was also back down at that low. It probably shouldn't be, right? Some are way off
Mm-hmm.
that low, some are at that low, and then USB is below that low, which is not. So that's just like relative strength, relative weakness, right? Looking at that initial reaction. So given how the price action's going and how they're trading, this drama is probably not over yet.
Yeah.
It could be one more little thing, could be two more little things. It could spill into something, it's hard. It's really hard to say, honestly.
Mm-hmm. Yeah. As you mentioned already, the market is still pricing in a few rate cuts by the end of this year. And Powell, as you said, was asked directly about that today during his press conference. He said it's not in their forecast to cut rates at all this year. The dot plot shows early 2024 is when rate cuts might start, as long as inflation is on the path that the Fed is expecting. Um, you've talked in the past about how the market is not trading like we should be getting rate cuts, comparing it to 2018 when the market kind of forced the Fed to cut rates. So, do you think that that could shift in the future and the market's like, hey, we want this, so there's gonna be a meltdown to kind of make that happen?
So yeah, it's almost like a self-fulfilling prophecy when that type of thing happens.
Mm-hmm.
Like it's not like the market just magically goes down because they want that, right? Like
Yeah.
something, and more often than not, market's a smart thing. More often than not, you find out a little bit later, like what's really going on.
Mm-hmm.
So that's definitely a possibility. We've also seen this whole bear market, many people have argued that we never really saw a real capitulation event in the
Mm-hmm.
market. We've seen kind of one-offs in different sectors. And even still, like we had a capitulation event in the regionals in March, and now here we are all this time later, and we're back down to those levels where that we shouldn't even be testing,
Yeah.
if that was it, right? Um, so yeah, again, like these rate cuts, it I don't see how like and after today where those are increased too. We're pricing in I think 3 to 4 by January. So a full,
Yeah.
1%, right,
1%.
of cutting. I don't mathematically see how that is going to happen if either inflation, doesn't inflation needs to like nosedive to 2% this summer, which
Mm-hmm.
is really hard to see that happening if everything keeps holding up. Or if we actually have a recession and the market will trade down because of
Mm-hmm.
that, um, then we'll force it. So like today we hiked up to 5 to 5.25, and as you said, that matches the high in 2006. I think it was 2007. And if you
7.
look at that chart of like the Fed funds futures, maybe it's going to be the same thing, but they hiked and then they held a little bit and then they started drastically cutting. And then by towards like the later part of that cutting cycle, as I've said before, as like other people have said before, markets stop panicking when the central bank starts panicking. So right now the
Right.
markets aren't panicking, central bank's not panicking, there's no panic out there. So why, like, they're going to start cutting and doing that if, not to say that that's panicking, but that's easing things, and there's no reason to ease things right now. So
Yeah.
it's weird for sure.
And it's important to remember that the last time rates were this high and then we got pretty quick cuts was also the financial crisis.
Right.
So,
Yeah.
it's
And
all,
obviously, like, that's probably not happening again to that degree
yeah.
with the type of leverage people were using back then is not the same now. But
Hmm.
new things happen, new risks happen that haven't happened before. So we'll
Yeah.
see. It could be something that has never happened before.
Hmm.
So we'll see.
As a trader, when you're looking at these regional bank issues and everyone, we know the Fed's investigating it. Powell talked about this multiple times in his presser today, saying, it's vice chair's job to review this, see where more regulation might be needed. He didn't really want to comment on any of his thoughts about it, saying, no, that's vice chair Barr's job. I'm just going to let him handle that. What type of changes would you maybe expect in the banking system in response to everything that's happened with SVB and Signature Bank, now First Republic, now looks like might be PacWest? There seems to be a contagion just across those small banks. What might
Yeah,
change?
I mean, it's weird how it seems to be this lag of mark to market, just, marking the prices of their positions and, oh, that looks bad, but we're fine. And all of a sudden it's so bad that it's the end of it.
Yeah.
So just, I mean, it seems like just better risk. The way that a lot of people seem to have been talking about it is it's not necessarily the banking sector as a whole, as it more is just the management of these specific banks, right?
Mm-hmm.
Like why kind of punish everyone for some people taking bad risk? Like they didn't manage their risk, and people get punished when they don't manage their
But
risk.
even
I
the
know that
Fed,
for sure.
like the Fed does their stress test, and the stress test never
Yeah,
caught any of this,
yeah,
right?
yeah. That's
Yeah.
a great point.
So it's just,
Honestly,
I
yeah,
think a question of like how much more oversight do those smaller banks get in
right, yeah.
response, and none of us know.
They clearly they clearly need it. It's just it seems to be more real time
Mm-hmm.
um with like marking positions. Honestly, it seems like all
Yeah.
this possibly could have been avoided.
Mm-hmm.
But you'd think the people that were running the show here were smart enough to do that. So
Yeah.
it's interesting. And this is like almost what I was saying before. Like it's like it's not a new thing, but it's not like discovering a new element or something. Like this isn't
Yeah.
super complicated, but how did this even happen in the first place, right?
Mm-hmm.
And that's another reason why like 2008 probably won't happen again, at least in that way, because we learn our lessons and
Right.
we don't make those mistakes again. But maybe we're making mistakes elsewhere that we haven't made them before,
Mm-hmm.
and now this is something else that we need to tighten up.
Yeah.
So yeah, we'll see.
Just a reminder for everyone who's here live, we have a couple questions already lined up, but submit your questions in the chat. Whether you're a beginner trader, an experienced trader, no question is too simple, might be too complicated, but we'll test Patrick on that. So submit those questions to him or to the chat. I'll ask him as when we get to that portion of our event. So in addition to the Fed decision this week, it is also jobs week, Pat. And Powell did highlight the continued strength in the labor market today during his presser, saying, quote, there's still so much rather extra demand in the labor market. And we saw that this morning. We got our first look at April job growth with the ADP private employment report coming in way hotter than expected. Private employers adding 296,000 jobs last month. That was the strongest monthly increase since last July. Powell saying that this situation in the labor market is putting us in a position to maybe avoid a recession later this year. He's still leaving the door open to no recession, but saying that, well, we'll probably get a mild recession. Do you think it's really possible for us to avoid a recession?
Yeah, I definitely it seems like we're in this scenario again where you can't have both. So I
Yeah.
definitely think it's possible for us to avoid a recession.
Yeah.
Whether avoid means push back, we'll see.
Mm-hmm.
But it's definitely possible to avoid it. But I don't see how we do that and inflation goes to 2% and we cut rates. It
Right.
doesn't, we don't get a recession. The stock market goes to all time highs. We cut rates and make money easier. I don't see how inflation could just go
Doesn't
low and
just
stay
stick.
low.
Yeah.
Yeah. So it seems possible, but it just doesn't seem like we're gonna avoid a recession totally and everything's gonna be perfectly fine, and inflation's gonna go back down to 2%. And the Fed is gonna aggressively cut rates at every meeting, going forward. Basically,
Yeah.
it just doesn't
Pa-
seem like you can have both.
Powell kind of said the words nobody wants to hear Powell say, that it might just be different than it's ever been before. But so, today, that, oh, yeah, we might have a recession, but it's going to be like a weird one. We'll have like a strong
Right.
labor market, but then nobody can get loans and nobody can buy anything because credit is so tight. And that comes,
Right.
he's kind of giving the regional banks this like, hey, you're doing our job for us, you're helping us by tightening credit or credit, oh my gosh, qualifications, credit
Right.
conditions. So I guess we'll see. But the market is still pricing in what, a Q3 recession at this point.
Yeah, it seems like it's the recession that keeps getting pushed back.
Mm-hmm.
What is a recession? They changed the definition. I know we
Yeah.
had two consecutive quarters of lower GDP, like last summer or something.
Mm-hmm.
So maybe we already had a recession and now we're out of it, and now we're going to go back into one.
Mm-hmm.
Um, but yeah, it just doesn't seem realistic for everything to hold up so well and for inflation to go back down.
Yeah.
And if anything, like honestly, it just makes the rich richer and the poor poorer, like in the real bigger picture, if just like
Mm-hmm.
markets keep holding up, because that's who owns the majority of the markets. But then if
Mm-hmm.
inflation stays up, though the people that make less and don't own a ton of stocks, they suffer more. So it's not great. So and Powell has been very clear too. It would be better to cause a risk. They're very clear. It's better to kind of rip the band-aid off, right? Like have a
Right.
recession versus have years and years of inflation that is far off their target.
Mm-hmm.
Just yeah, we don't want that, and I think we
Yeah.
don't want that either. So
Mm-hmm. So the official April jobs report comes out on Friday morning. The ADP report and the official report can vary widely at times. We did see that last month, but then the ADP report was revised downward for March to be more in line with the official report. But expectations for Friday morning are a gain of 180,000 jobs and the unemployment rate ticking higher to 3.6%. That's a sign if you're gaining jobs with the unemployment rates going up, it's a sign more people are entering the search for jobs, maybe coming off the sidelines because they need a job, because maybe they can't live off their savings anymore, et cetera, et cetera.
right.
So talk me through the strategy for Friday morning as that report comes out at 8:30.
Yeah, so we'll have to see what SPY's pricing. I don't know off the top of my head what SPY's pricing for the Friday close, but I'll check. I'll probably wait till the end of the day tomorrow.
Mm-hmm.
Check at the end of the day tomorrow. I'm sure it's going to be something like 3-ish points, something like that. VIX has been so low, right? So we used to price 10 points for these events when VIX was in the mid 20s, upper 20s. Now
Mm-hmm.
VIX in the low teens back in like 18 a day or something, like it's not low teens, but in the teens in general. Um, so the market, everything, lower VIX, we price smaller moves. So I'll see what the market's pricing, and then react to it based on the reaction. I know someone uh, this event last time asked like what my favorite trade was, and off the top of my head, I kind of came up with a good answer, but same thing. Like my favorite trade is probably buying quality in fear. So
Mm-hmm.
if we go down big on Friday and we're getting that like measured, say we're pricing 3 points, we get that measured downside move of 3 points. I'll look to buy some quality, whether it's say the market is trading below Thursday's low. I'll look for names that aren't trading below Thursday's low. Microsoft Meta had great earnings reports, so those should probably get bought up in any dips. That's
Mm-hmm.
quality, right? If we go up, I'm long some a little bit, so maybe take profits, maybe counter trend like cute shorts. But it's hard. It's very hard to fight the short side of the market when the VIX has just been so subdued. So we'll see. But yeah, just again, same as other events, see what the market's pricing based on the options market. And then yeah, we'll see how we react and go from there, if it's a big reaction or not. For the most
Mm-hmm.
part, we haven't, even like today for the Fed, we eventually came down this afternoon. But
Yeah.
from two, we ranged out from like 2 to 3 and then broke down a little after 3. But for the most
Mm-hmm.
part, it was just chop and nothing, which is pretty unexciting. So.
Yeah. How do you trade in such a choppy market? Like, what are you doing during the
So
day? You're
yeah,
just sitting
so
there watching it, or?
definitely sitting there, not blinking much as I'm watching the tape for sure. Um,
Mm-hmm.
so I know like what the market's pricing in before, in case we get some extreme move.
Mm-hmm.
And then if we don't get an extreme move, I'll let a range build out, and then I'll trade based on that range. So like today, from roughly 2 to 3, we roughly range between 411 and 413, and we broke 413 a couple of times, but they sold it right back lower. We broke 411 a couple of times, they bought it right back up. And if it took
Mm-hmm.
like an hour to finally break 411 to the downside to get that move. But so I'll let some type of range play out and then look to see how that range breaks, because anyone that's shorting, if it breaks up, anyone that's shorting is out of the money. Anyone that's not long needs to buy. vice versa, breaks down. So yeah, I do the same thing with like earnings names, really anything post a move, let like that range break out. So that's what I was doing today, was just watching that range. And you usually get that range from like 2 to 230. And then within the first 10, 15 minutes, Powell's saying something drastic, but we really didn't move until he stopped the press conference.
Yeah.
But yeah, just watching the range build out, watching the market participants make the market for me. And then whoever gets like, I'm trying to take the max pain trade. So if we're going up and shorts are getting squeezed and longs need to buy, I want to add fuel to that fire. And then same way on the downside. For momentum, like that's momentum type trading, right? So
Yeah. I think that your ability to kind of sit back and watch and know, like, define the range and let the market tell you what to do, it speaks to you being an experienced trader. Uh, how, when you were maybe a beginner trader, was that more difficult for you to be able to do? And how did you develop that skill
for
to say, okay,
sure.
I'm just going to kind of sit on my hands and wait and watch what's
Yeah.
happening and
I
then get
mean,
into it?
developing the skill was purely just losing money enough times to say, okay, I need to stop freaking out at these movements and like take a step back. However many, years that took, or my first year, or whatever. So yeah, just, I used to, oh, like we're ripping up, let me, buy right away. And then, we come back down and it stops me out and then we go back up. And many new traders, I feel like, get stopped out a lot because they're a little bit too micro with things usually. They're not looking at the bigger picture. So like SPY can move on a Fed day. You don't want to try to make 20 cents on SPY. I want to make multiple points on SPY on a Fed day if possible. So yeah, just getting burned enough times where, I stop touching the stove and I take a step back and figure out if the stove is hot or not, I guess,
Yeah.
before I touch it.
Good metaphor. I like it. All right, so let's talk about earnings as well. More than 1,400 companies reporting Q1 results this week. A lot of these companies, we've seen the stock fall even after beating expectations, even solid beats. Like Ford had a really solid beat, but then had a drop, but I think did close higher. The focus for the market kind of seems to be on forward guidance, and that hasn't been as rosy as the Q1 results have been. We've seen a lot of reiterated guidance or even lowering of outlooks despite these companies having these solid beats. So, as a trader, what does that signal for you about the economy or the market later this year?
Yeah, so yeah, great point. The guidance is definitely always important. It signals to me that the upside is capped. It doesn't signal to me that we're going down per se. It just
Okay.
kind of signals to me that the upside is capped. So, you know, people are always getting on, TV and saying, we're going up a lot or we're going down a lot or whatever. And people rarely talk about like a flat market, which, the market's never truly flat. But I mean, look back 6 months from now, were we trading at the same price? Right now, it more or less is yes.
Mm-hmm.
So so it signals the upside is capped. And then it just depends if we get this recession or not. Where again, if we get the recession, markets trade down and like we start to force rate cuts in a way. That'll be one scenario. But then the other scenario is we don't get the recession, or the recession keeps getting pushed back. Inflation doesn't nosedive to 2%, which doesn't seem like it's really possible if everything holds up perfectly.
Mm-hmm.
And then that will just lead to more of what we're dealing with now, which is just it's been range bound shop, range bound shop. Maybe we break out 100 points to the upside or the downside, and then range bound shop. And overall, I mean, if I look at like an SPX chart right now, the S&P is trading at the same place we were trading in literally last summer. So it's been roughly a year, more or less, almost no progress. We've had good down moves, we've had good up moves, but there's just no actual progress overall.
Mm-hmm.
Um, so that's not great for long term, but it is what it is. range bound trading is a thing too. You just got to adjust to the market. So yeah, it doesn't, I feel like people might read that or hear that and think it's a bad thing. And it doesn't necessarily mean it's a bad thing to me. It just means like the upside is capped. For stocks like really go up in a big way over time, you need that, like growth is super important. That's why like you get these companies that get so big and they almost become value plays to growth plays. It's kind of like what happened to Amazon within the last whatever 3-4 years. So yeah, so you need that real strong growth to get those like real, long-term trends.
Yeah.
It seems like that's not coming right now, like the big growth.
Yeah.
Is what it is, I guess.
Speaking of a value stock, oh, my camera, okay, there we go. Speaking of a value stock, Apple is a quintessential value stock for most traders, and their earnings report is coming out tomorrow after the close. How important is this report for traders? And talk about your strategy if you're going to play it, or what you would lay out as your strategy hypothetically, even if you're not planning to play it.
Yeah, so definitely very important. Apple, obviously, gigantic company. I saw a chart today just comparing Apple to the Apple's market cap to countries worth, right? I think Apple is worth a little bit more than Canada right now. So obviously very important. It's a super, you could make like you could make a good bull and bear case on it, where your bear case would be it's an overcrowded trade. There's so much money hiding there that a lot of it could come out if something bad happens. But then you can make the bull case of, well, there's a reason that it's an overcrowded trade. Look, they have more cash on the books than, a lot of like smaller countries even, right? So therefore, even if things are bad, they're probably not going to say, well, we don't think anyone's ever buying an iPhone again. So therefore, one of my favorite trades, buying quality in fear, might come about. So I'll see what Apple's pricing. Right now, I think it's pricing like 7 for Friday's close right now. So if it has like a really big down move, I won't be reacting exactly. Apple usually reports at 4:30. I won't be reacting exactly at 4:30. I probably won't have a position going into it. But if it's down a lot, I'll try to read right away as fast as I can why it's down a lot, and then see if I can buy that weakness. If it's up a lot, I might be able to short that strength. It's had, again, a huge move kind of over the last month or two. There's a lot of money hiding in there. So even if it does, it was almost like Amazon too, where you saw Amazon B had a huge move up, and then they had like the AWS cloud comments, and it came all the way back down.
Yeah.
And I was kind of thinking the same thing with Amazon. Like, even if it's perfect, just how much real upside are we getting? So I kind of feel that way with Apple, or even if it's really truly perfect, like how much upside really can we get? Maybe it doesn't crash, but I don't know. We'll see. So it should be interesting. It's a crowded trade, but it's a crowded trade for a reason. So
Definitely. All right, so I do want to get to our audience questions. I really have a couple. So anyone who has a question, please submit it now so I can make sure to ask Patrick before we wrap this event up. Ryan asked, he mentioned PACW in free fall now. Do you see any trade on that? So talk through how, if you were to take a position on PACW, what would it be and how would you do it?
If you're going, first of all, the regionals are super dangerous right now. If you're going long equity, your out is 0. So make sure that if that stock goes to 0, you're not having a bad life-changing event with your finances. Otherwise, I guess perhaps, but like a PACW, I'm probably not doing anything with it now at this point. I'm not the one to watch that go down from 10 to 3 and then short it from 3 to 0. It's just not my type of trade. Some people like that. Some people might be getting really short now because it feels really certain. For me, I'm probably not doing anything with it. But again, buying quality in fear might be something that comes off of this. So off the top of my head, WAL just again seems to hold up well. It's way off that March low. So if that WAL has a down move and you really feel like you need to be long a regional, even though I don't think you need to be long a regional right now. Maybe, something like that, or even just KRE, just, a little bit safer. Or an XLF for a JP Morgan or a BAC,
Yeah, your big
just
banks.
maybe, yeah, right. Like, which that's definitely more quality.
Yeah.
So yeah, something like that. But I don't know. For me, I'm not the one to be putting on a new short in that now.
Yeah. The rescue, JP Morgan's rescue of what's the name? First Republic on Monday,
yeah.
the purchase of FRC on Monday there's been a lot of criticism of it. There's been also a lot of support of it. It's, kind of a mixed reaction depending what side of where you fall on how you feel about big banks getting bigger in this kind of crisis. But basically the FDIC says it goes to the best bidder that's going to cost us the least amount of money, and that was JP Morgan Chase. How Derek talked about this last week, how whoever takes over FRC is going to have to do a big rebranding of the bank and all of that. So how does JP Morgan now they got obviously a lot of deposits, and they also took on some loans and all that at quite a discount from the FDIC. How does what position does this put JP Morgan Chase in moving forward?
Sure. So I don't think it affects JP Morgan Chase too much, where more, and Derek was making a good point about it in our room this week, shout out to the Pro Desk, where it seems like now that this has happened, there's no reason for anyone to really try to step into any other regional bank to possibly save it when, if it's just going to go to zero and like they just go into receivership and everything like that. Like a bankruptcy, someone else was making a good point too. Like a bankruptcy case, you can have like bondholders make their case, even like equity holders, stuff like that. Whereas there's just no case to be made. And now that it seems like this is happening, why step into PACW? Like, why step into anything else?
So then you would think like PacWest says, hey, we're looking for a buyer, but any big bank is going to say, well, I'll wait for you to go into receivership and I'll get a better deal.
Right. So that FDIC. Like takes away that speculative bid that might once have been there. So, more offers, less bids, stock will probably go down more. So yeah, I don't know. The regionals just, a lot of people will tell you to not trade something you don't understand. And while I'm trying to understand it, I'm not reading these people, these banks' balance sheets or anything. So I'm not taking big positions either way.
Yeah. Okay. John asked if you plan on trading any of the treasuries after today. I think after the Fed decision today. Do you trade treasuries yourself really ever?
Not often, but I definitely have traded TLT in the past when it calls for it. I see TLT has been relatively flat. Rates have been relatively flat. It looks like the 10-year, and by flat, I don't mean flat today, but I mean, again, like bigger picture, past couple months or so. Probably not, but I definitely will watch the treasuries and how they move to try to gauge whether the market is risk on or risk off for equities. And it's always varying. Like sometimes, TLT going down and rates going up is bearish. But then sometimes TLT going up is money coming out of equity into bonds, and that's bearish too. Like you can make bearish and bullish arguments for both movements depending on what's going on. So yeah, probably won't be trading treasuries too much, but we pay attention to them every day.
You mentioned that relationship between the bond market, the equity market. There's also, a relationship between international markets and the US equity market, and then the currency markets and the equity market, all of that. As a trader, even if you're not trading those specific things, you're not buying bonds, you're not trading currencies, but it's important to understand the relationship between all of them, right?
For sure.
Yeah.
Someone asked about like supply and demand, I think last time, and that's really all it is. Like the way I kind of look at it, whether it's right or wrong to look at it this way, is it's like energy. Like you can't create it, Although I guess the Fed can print it, but then when they do, that leads to inflation, right? But like it's a finite thing, and it's all someone when I first got into trading explained this to me pretty well, and you just kind of look at it as like a casino in a way with multiple poker tables, and it's just where are those chips going, like which table is those chips going to, which table are those chips coming from. It's just money moving around out there. So sometimes money is moving from different sectors of the stock market to other sectors of the stock market. Sometimes money's moving out of the stock market to the bond market. Sometimes it's going to the money, just the money market in general, right? But it's just all about money moving around and just trying to figure out where the next big wave of money is going to. So that's kind of how I look at it with like the supply and demand thing. Money isn't really, it's not being created or destroyed in the stock market. Apple's stock going up is good for them, but Apple IPO'd and sold stock at one point. So they're like theoretically taking a loss on that stock that they sold, but the money they used from that, they're able to generate so much more money, and now they're buying their stock back, right? Like theoretically they're buying their stock back at a much higher price than where they sold it at.
Right.
Like it's not really being just magically created, it's just transferring. If you made money today, someone else on the other side of your trade possibly lost money. It's not as simple as that, definitely. But in theory, that's kind of how I look at it.
We're a week away from the next inflation reading. The CPI will be out next Wednesday morning. For those who are watching, I'll be live with Scott Redler that day, so I'll put the link in later. You guys can register for it.
I didn't even know CPI is next Wednesday. It's crazy.
It is, yeah, next
Week's
Wednesday.
so
It's
crazy.
like these things just come.
Yeah.
So Powell's thing today was we're going to be data dependent. Let's just talk through a scenario here, you and I. If we get this really hot CPI reading next week, how much fear comes for traders that, okay, we're going to get more rate hikes, no rate cuts? And how do you see a shift happening in the Fed futures market if we get some kind of crazy CPI reading next week?
Yeah, for sure. We'll see a shift, definitely. We haven't been seeing the big extremes and things lately. So, and that's why everything's just like so stuck and range bound, and we keep almost rolling over, we keep almost breaking out, and then we kind of break out and then give it back, and then SVB blows up and we roll over and immediately come right back. So we'll see, but that I think is more the data coming up over the next like month of May or so. Is definitely going to be
today's presser makes that more important than it's been in the past couple months.
Sure. So the date, like I think the CPI next Wednesday could arguably move us more and be more important than the Fed meeting today, because it's about what we're pricing in, and the market is trading based on the market. The market's not trading based on what Powell's saying. So again, we're holding up well because we're expecting all these rate cuts to come, even though Powell's saying they're not coming. And if the data starts to confirm that inflation isn't going to nosedive to 2% by the summer or whatever, then I would think we start to unprice those cuts. Eventually, we're just going to eventually it's going to be September. Like we're pricing in a cut in September, I think, right now. So it's not that
eventually
far away.
We'll see.
We'll see, I guess. And we'll see. The summer's going to be really interesting for sure.
I think so too. Our next question comes from Ben, and he asked, what are your favorite moving averages that you use in your trading?
Sure. I use the 80 EMA exponential moving average and the 21 EMA exponential moving average. And then I have like a 50 SMA and a 200 SMA on my daily. But really, all I think I really need is an 80 EMA and multiple time frames. And I was saying this, I think, before, like multiple time frames is so important. So, where is the 80 EMA on the 5-minute, the 15, the 30, the daily, the weekly? How is it sloped on all those time frames? Are they all agreeing with each other? Are some converging with each other? I used to use like a lot more indicators when I first got into trading. And then it's just you got to take the noise out and make it as simple as possible, really. So like I have an 8 and a 21 EMA. I like the 5 and the 10 SMA as well. on daily charts
Mm.
to, I guess be a little more specific. But overall, just pick something shorter term, something a little bit longer term, and then just use multiple time frames. Um, and yeah, just follow kind of the price action, the money flow, if you will, with that. Yeah.
Okay, everyone. So this is my kind of last call for questions. So anyone else who has a question, submit it now. I'll keep talking with Patrick here to give you some time to submit those questions. But just remember, don't be scared to ask a question. No judgment here from either of us, and he's ready to answer anything. Pat, I want to talk about your role a little bit with T3. So you've been a trader at T3 Trading Group for how many years now?
Almost five
Okay.
about, I guess. Yeah, almost five. It'll
Okay.
be five in like August.
Mm-hmm. And as I mentioned at the beginning of this, Pat is a moderator in the T3 Live's Pro Desk virtual trading floor. So that's a room of other professional traders, mostly who trade with T3 Trading Group, led by Derek Oldensmith, who is the senior trader at T3 Trading Group. And Pat's role within Pro Desk is very research focused. I've been in the room and I all day long, you just alerts from Pat with the news that's happening in the day. So we did this last week, but for those who might not have been here, or last time, about a month ago, talk us through like your sources, what your favorites are, how you get all that news, and how you kind of filter through what is and isn't important to then give to the room to maybe act on.
Yeah. So Twitter is definitely the best resource I have for breaking news and everything. A lot of these, to the point where a lot of these news services, whether it's Bloomberg or Reuters or whatever, they more often than not are picking up an article that's like being posted on Twitter, if not on the company's website. But so
Mm-hmm.
like, TechCrunch or The Information or like one of those will post a blog about, Meta or something. And then you see a Bloomberg headline, Meta, blah, 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 source TechCrunch. But
Mm-hmm.
it's almost usually hitting Twitter first. And if it's
Mm-hmm.
not, then there's so many people out there that post headlines because they just, I don't know, they want to be the first person to post it on Twitter. I don't know, people like that. So think I'm thankful for them. Hopefully they don't go away.
Yeah.
Um, but so it's just, it's free, first of all, which is really nice. It's really
Mm-hmm.
fast. And again, so you can like use the search bar, you search for, whatever. If it's CPI in the morning, search for CPI 830, sort by
Mm-hmm.
latest, see who's tweeting it first, who looks more legit, do a little check on their profile to see if it looks good or if it's just like some stupid robot or whatever. Um, and then, yeah, same thing with like stock names. Like Meta had a big headline today about the FTC wanting to block them from making money off like kids, something like that, more or less,
Mm-hmm. Mm-hmm.
monetizing like underage people, something like that.
Mm-hmm.
That that was like right all over Twitter, right there. Multiple sources coming out, and you can just search $ Meta, look at latest, see where it's posted, see what the time is. And I've just done that over the years and found that you can pretty much find everything there, really. And whether it's 20 seconds later than Bloomberg, I don't really care, because if it's
Mm-hmm.
big enough news, you can be a minute late. It's going to have a 10-minute plus new move if it's big.
Mm-hmm. Yeah, right.
And if it's not big enough, then you'll see, like you watch the price action, you'll see the algo volume come in, and then you won't see any more, like the volume just dies off right away and you won't see anything.
Mm-hmm.
So Twitter like is great. And then like a couple other ones, Atom Finance, ATOM is great for more fundamental research, not really breaking news, but if you want to like really dig into a company.
Mm-hmm.
Um, and then yeah, it's pretty much a couple others, but really just Twitter, and then like that ATOM is pretty solid. And that's
Okay.
just from time of not wanting to pay expensive news report, pay these news sites when I know it's being shared elsewhere. Like the internet is so powerful now, everything is shared all the
Mm-hmm.
time. You know what I mean? So why pay for something when I don't have to, basically.
Totally. Ryan asked a question about Amazon. He said, as you noted, Pat, Amazon commentary on the AWS outlook killed what was a good report. But wouldn't that outlook already be in the guidance they gave that same day? So why punish the commentary too? Wondering if you think it's settled enough to buy in this 103s area.
Good question. It looks like it has settled. I saw, so yesterday, and this is a good question for like what price action is. Yesterday, the market sold off big in the first half of the day with like the regional bank drama, and at like, well, pretty much everything sold off except for a very select couple names, and one of those was Amazon, and that was after Amazon had been selling off for I think like 2 to 3 days following that earnings announcement. So like Amazon's relatively weak coming into yesterday, and for a good reason because of the negative comments. Then all of a sudden yesterday, the market gets more or less, slaughtered for half a day. And while that's happening, Amazon's getting bid up and bid up and bid up. So clearly there's some real buyers in this 103 area. I like the idea. Again, and again today too, actually, Amazon was stronger when the market was weaker. So as of yesterday, Amazon has that relative strength. Yeah, it's probably worth a look versus looks like yesterday's low. If not, obviously got the 100 level. It's probably going to take a bigger market breakdown to break Amazon 100. But we're at the point also with, we're in a range with this market. It's not impossible for the S&P to break 4,100 and to have like a down move. So if that happens, Amazon's probably going back under 100. If that doesn't happen, Amazon's probably going to bounce well from here. So probably worth a look, but manage your risk.
All right. And then Ryan also asked, you've been mentioning WAL, that's Western Alliance Bancorp, right?
Yeah.
As a regional that looks okay, but they're definitely not looking that great after the close today, down more than 34% in my last check. With the PAC W news. So do you see any trade there, or would you avoid it?
Yeah, I mean, I'm gonna avoid it. I've been avoiding these, but even still, like this still matches my point where it's down. I see it down 37%. It's trading under 20 right now. The March reaction low was mid sevens, so it got under 10 in the March reaction low. It's still more than double off that, whereas the PACW March low was 5, and now it's 50% below that.
Right. That speaks to the importance of looking at these types of stocks, big stock drops in that larger time frame versus just in the past week.
So like I just say WAL because I noticed the strength in the chart and it's still there. I don't know it well enough for me to put money in it versus zero. I don't know well enough for that, but so far still, again, just looking at it compare. And again, like even KRE is trading in the 36s. The March reaction low was like 42. So even just versus the sector as a whole, WAL still has that relative strength, arguably.
All right. So we're going to wrap up here. Pat, just give me kind of your thoughts on the rest of this week, where you're kind of positioning yourself, what you're planning to do, what your strategy is before we go.
Yeah, Apple tomorrow. Definitely super important. Probably gonna be not that exciting, I feel like, just because with the VIX staying as low as it's been, although I see it awake after hours a little bit too here. So we'll see. Maybe we sell off tomorrow and any bad news in Apple gets priced in on a sell off tomorrow. We'll see how we trade tomorrow based on the Fed today. Often post Fed days can be trend days. Like sometimes you get afternoon confusion, then people digest the news overnight or whatever, and then they really put the money to work tomorrow. We'll see. Yeah, go ahead.
Does the Friday open get a little more complicated that you have Apple after the close tomorrow and then jobs report before the open on Friday? So you have these two kind of big, huge things happening, right?
Yeah, for sure. So I'll watch just how we trade into them. So like if we're flat tomorrow relatively into Apple, could go either way. If we rip tomorrow, Apple, be careful on the upside. If we sell off big tomorrow, Apple, maybe bad news starts to be priced in a little bit because of that. And then same thing with Friday morning too. If we're just, horrible tomorrow and then Apple's horrible and Apple's down, we're going to be down decently into the jobs number. So then how much short-term downside is there, right? And same thing on the upside. So we'll see. And if we're overall flat and choppy into both, flip a coin, I guess we'll see.
Yeah. All right, everyone that joined us today, thank you so much for joining us. And Patrick, thank you for joining me for this event. Everyone, there is a link in the chat for the next event next Wednesday. That will be again with Scott Redler, who leads the Alpha Team Virtual Trading Floor. Pat will be back at some point in the future. So I'll make sure that you all get an email inviting you to that. And if anyone is interested in working more with Pat, you can reach out to him directly here on LinkedIn if you want to, or reach out to me on LinkedIn. I can make that connection as well. So thank you everyone for joining us. Pat, have a great rest of your week trading.
Thank you. Thank you.